Good afternoon, friends. We are going to have a discussion on who should file income tax return in the current year. There are 4 or 5 points which we need to understand and learn. The first important point is income exceeding the taxable limits. As you are aware, currently there are two types of tax regime which are in effect under the Income Tax Act 1961. According to the new tax regime, if taxpayers' gross income before considering deductions under section 1038, 10A, 10B, 10BA, 54, 54B, 54D, 54EC, 54F, 54G, 54GA, 54GB, and almost all subsections under section 80 exceeds rupees 3 lakhs, or under the old regime for individuals below 60 years exceeds rupees 2.5 lakh, or for senior citizen 60 plus exceeds rupees 3 lakhs, or for super senior citizen 80 plus exceeds rupees 5 lakh, then they are required to file their income tax return for the financial year 24-25, assessment year 25-26. Many taxpayers wrongly assume that if their net taxable income after legal deduction falls below the threshold limit, then they need not file income tax return. But this is incorrect position. For example, a general taxpayer under the old tax regime has a gross income of rupees 3 lakhs, claims a deduction of rupees 60,000 under section 80C of the Income Tax Act. Thus, the taxable income becomes rupees 2.4 lakhs below rupees basic exemption limit, and since the gross income exceeds rupees 2.5 lakh, now they are required to file their income tax return. Only by filing the return of income, the authorities can verify can claimed deductions under section 80 are valid or otherwise. This rule also applies to the non-resident Indians, though they are not eligible for tax rebate. Second important point, claiming of tax rebate is the right of every taxpayer, but a tax rebate only can be granted if the return of income is filed. Even for belated returns, taxpayers can claim eligible tax rebate. Therefore, even if your net income is not taxable, you should file a return to avail tax rebate. Otherwise, late filing fees under section 234F may apply. Notification number 37 by 2022 specifies that if the business of the assessee, that is the sales, either turnover or gross receipts, exceeds rupees 60 lakhs in the last financial year, it must file income tax return, whether income is taxable or otherwise. If the professional income, that is the gross receipts from a profession of professionals like doctors, engineers, lawyers, chartered accountant, architects, exceed rupees 10 lakhs, then irrespective of taxability of income, they must file their income tax return. In case of TDS and TCS, total tax deducted at source or tax collected at source was rupees 25,000 or more, and in case of senior citizen, if it was more than 50,000 or more, then they must file their income tax return. The total deposits in one or more saving bank account in a financial year exceeds rupees 50 lakhs, the return is required to be filed. Then section 139 1B has made some three important amendments to the persons who are supposed to file their income tax return. If deposits in one or more current account in banks exceeds rupees 1 crore in the previous year, then in that case it must file their income tax return. This applies only to the banks and not post office current accounts. However, cooperative banks are included. B clause is, if you spent more than rupees 2 lakhs on foreign travel for your sale or for someone else, you must file income tax return. If your annual electricity expenses have exceeded rupees 1 lakh, even if your income is not taxable, you must file your income tax return. Then in case of foreign assets and income, separate rules are there. If you are a resident for tax purposes and you own or have beneficial interest in foreign assets, or you are earning income from foreign assets, one must file his income tax return. This includes assets held as a beneficiary as well. Also, if you are authorized signatory on a foreign bank account, you are required to file your return of income even if account is inactive. Foreign assets may be movable or immobile. In that case, if a foreign bank account was opened while you went abroad and you are not closed the account upon your return to India, still it's required to file his ITR. There are certain mandatory requirements. Entities such as companies, partnership firms, universities, college and research institutions under Section 35(1)(2), news agencies, educational institutions and hospitals under Section 20(10)(3), other organizations like trade union, trust, etc. are mandated to file an income tax return even if their income is nil in the financial year. Now, important deadlines are: for non-audit cases, you must file your income tax return on or before July 31st, 2025. For audit cases, you must file your income tax return on or before October 31st, 2025. And for transfer pricing cases, the return must go to the income tax department on or before November 30, 2025. So if you like this video of mine, please like it, share it, and subscribe to my channel. Thank you.